Question 1. What type of life insurance policy provides coverage for a specific period and does not build cash value? A. Universal life insurance. B. Whole life insurance. C. Term life insurance. D. Variable life insurance. Correct answer: C. Term life insurance. Explanation: term life insurance provides coverage for a specific period, such as 10, 20, or 30 years, and pays a death benefit if the insured individual passes away during the term of the policy. Unlike whole life or universal life insurance, term life insurance does not build cash value over time and is designed to provide temporary coverage for a specific need, such as income replacement during working years or mortgage protection. Question 2. Which type of life insurance policy offers flexible premium payments and an adjustable death benefit? A. Whole life insurance. B. Universal life insurance. C. Term life insurance. D. Variable life insurance. Correct answer: B. Universal life insurance. Explanation: universal life insurance is a type of permanent life insurance that offers flexibility in premium payments and death benefits. Policyholders can adjust the amount and frequency of premium payments and have the option to increase or decrease the death benefit over time, subject to certain policy conditions. Universal life policies also accumulate cash value based on interest rates and policy performance. Question 3. Which life insurance policy provides coverage for the entire lifetime of the insured and includes a cash value component? A. Term life insurance. B. Variable life insurance. C. Whole life insurance. D. Group life insurance. Correct answer: C. Whole life insurance. Explanation: whole life insurance is a type of permanent life insurance that provides coverage for the entire lifetime of the insured individual. It includes a cash value component that grows over time based on a predetermined interest rate set by the insurance company. Whole life policies offer fixed premiums, guaranteed death benefits, and the ability to borrow against the cash value or surrender the policy for its cash value. Question 4. Which of the following statements best describes a variable life insurance policy? A. It offers a fixed death benefit and premium amount. B. It provides a death benefit that varies based on investment performance. C. It is a type of term life insurance with flexible premium payments. D. It guarantees a cash value accumulation at a fixed interest rate. Correct answer: B. It provides a death benefit that varies based on investment performance. Explanation: a variable life insurance policy is a type of permanent life insurance where the policyholder can allocate premiums into separate investment accounts, such as stocks, bonds, or mutual funds. The cash value and death benefit of the policy are not guaranteed and can fluctuate based on the performance of these underlying investments. Variable life insurance policies require securities licensing due to the investment component involved. Question 5. What is the primary purpose of a final expense insurance policy? A. To provide coverage for funeral and burial expenses. B. To replace lost income due to disability. C. To cover medical expenses for a specific illness. D. To accumulate cash value over time. Correct answer: A. To provide coverage for funeral and burial expenses. Explanation: final expense insurance, also known as burial insurance or funeral insurance, is designed to cover the costs associated with funeral and burial expenses when the insured individual passes away. This type of policy typically has a smaller death benefit compared to traditional life insurance and is meant to ease the financial burden on family members during a difficult time. Question 6. What does an accidental death benefit rider provide to a life insurance policyholder? A. Additional coverage in case of death due to an accident. B. Premium waiver if the insured becomes disabled due to an accident. C. Guaranteed cash value accumulation over time. D. Accelerated death benefit for terminal illness. Correct answer. A. Additional coverage in case of death due to an accident. Explanation. An accidental death benefit rider is an optional add-on to a life insurance policy that provides additional coverage in the event of death resulting from an accident. If the insured dies due to an accident covered by the policy, the accidental death benefit is paid out in addition to the base death benefit. This rider is designed to provide extra financial protection for unforeseen accidents. Question 7. Which of the following statements best describes a critical illness rider in a life insurance policy? A. It provides additional coverage for accidental death. B. It offers benefits if the insured becomes disabled due to illness. C. It pays a lump sum benefit upon diagnosis of a specified critical illness. D. It guarantees a minimum cash value accumulation over time. Correct answer. C. It pays a lump sum benefit upon diagnosis of a specified critical illness. Explanation. A critical illness rider is an optional addition to a life insurance policy that provides a lump sum benefit to the insured if diagnosed with a covered critical illness, such as cancer, heart attack, or stroke. This benefit is designed to help cover medical expenses or other financial needs during a critical illness, providing additional financial security beyond the death benefit of the policy. Question 8. What does a disability income rider offer to a life insurance policyholder? A. It provides coverage for long-term care expenses. B. It guarantees a minimum death benefit regardless of market conditions. C. It pays a monthly benefit if the insured becomes disabled and unable to work. D. It allows for early withdrawal of cash value without penalties. Correct answer. C. It pays a monthly benefit if the insured becomes disabled and unable to work. Explanation. A disability income rider is a type of insurance rider that pays a monthly benefit to the insured if they become disabled and unable to work due to injury or illness. This rider provides income replacement during a period of disability, helping policyholders maintain financial stability and cover ongoing expenses while unable to work. Question 9. What does a long-term care insurance rider provide in addition to a life insurance policy? A. It offers coverage for critical illness diagnosis. B. It guarantees a minimum cash value accumulation. C. It pays for long-term care expenses if the insured requires assistance with activities of daily living. D. It provides additional coverage for accidental death. Correct answer. C. It pays for long-term care expenses if the insured requires assistance with activities of daily living. Explanation. A long-term care insurance rider is designed to provide coverage for long-term care expenses, such as nursing home care and home assistance, if the insured becomes unable to perform activities of daily living independently. This rider offers financial protection against the high costs of long-term care services, allowing policyholders to use the death benefit of the policy to cover these expenses if needed. Question 10. What does a spousal or child term rider typically provide in a life insurance policy? A. It allows the insured to convert the policy to whole life insurance. B. It provides coverage for a spouse or child under the same policy. C. It guarantees a minimum cash value accumulation over time. D. It offers additional accidental death benefits. Correct answer. B. It provides coverage for a spouse or child under the same policy. Explanation. A spousal or child term rider is an optional addition to a life insurance policy that extends coverage to a spouse or child of the insured under the same policy. This rider allows the insured to secure life insurance protection for family members without requiring separate policies, providing additional financial security for loved ones. Question 11. What is the primary purpose of the underwriting process in insurance? A. To determine the marketing strategy for insurance products. B. To assess the financial stability of the insurance company. C. To evaluate and classify risks associated with insuring individuals or entities. D. To calculate the policy premium based on investment returns. Correct answer. C. To evaluate and classify risks associated with insuring individuals or entities. Explanation. Underwriting is the process of assessing and evaluating risks associated with insuring individuals or entities. Insurance underwriters use various tools and methodologies to determine the likelihood of claims and establish appropriate premiums. This process helps insurance companies make informed decisions about accepting or rejecting risks and setting appropriate terms and conditions for insurance policies. Question 12. Which risk assessment tool is commonly used in insurance underwriting to evaluate an individual's health status? A. Actuarial tables. B. Credit scores. C. Vehicle history reports. D. Medical underwriting questionnaires. Correct answer. D. Medical underwriting questionnaires. Explanation. Medical underwriting questionnaires are commonly used in insurance underwriting to assess an individual's health status and determine their insurability. These questionnaires collect detailed information about an applicant's medical history, lifestyle, and current health conditions to evaluate the associated risks. The responses help underwriters make informed decisions about policy issuance, coverage limits, and premium rates. Question 13. Which of the following statements best describes the use of actuarial tables and mortality tables in life insurance underwriting? A. Actuarial tables are used to determine policy premiums, while mortality tables estimate cash values. B. Mortality tables estimate life expectancy probabilities, whereas actuarial tables assess health risks. C. Actuarial tables help determine life insurance policy benefits, while mortality tables evaluate underwriting risk. D. Mortality tables estimate probabilities of death at different ages, aiding in underwriting and pricing policies. Correct answer. D. Mortality tables estimate probabilities of death at different ages, aiding in underwriting and pricing policies. Explanation. Mortality tables, also known as life tables, are statistical tools used in life insurance underwriting to estimate the probabilities of death at different ages. These tables provide essential data for assessing mortality risk and pricing life insurance policies based on expected life expectancy. Actuarial tables complement mortality tables by providing additional calculations for risk assessment and policy pricing. Question 14. What role does underwriting play in determining policy premiums and coverage in life insurance? A. Underwriting evaluates policy benefits, while premiums are based solely on policy owner preferences. B. Underwriting assesses risks associated with insuring individuals, influencing both premium rates and coverage limits. C. Premiums are fixed regardless of underwriting outcomes, with coverage determined by policy owner requests. D. Underwriting is optional and does not impact policy premiums or coverage decisions. Correct answer. B. Underwriting assesses risks associated with insuring individuals, influencing both premium rates and coverage limits. Explanation. Underwriting plays a critical role in life insurance by assessing risks associated with insuring individuals. The underwriting process evaluates factors such as an applicant's age, health status, lifestyle, and medical history to determine the level of risk. This risk assessment influences both the premium rates charged for the policy and the coverage limits offered to the policyholder. Question 15. How does cash value accumulation work in permanent life insurance policies? A. Cash value accumulation is based on annual dividends received from the insurance company. B. Cash value accumulation is guaranteed and does not fluctuate over time. C. Cash value accumulates tax deferred based on premiums paid and interest credited to the policy. D. Cash value accumulation is unrelated to policy premiums and remains fixed throughout the policy duration. Correct answer. C. Cash value accumulates tax deferred based on premiums paid and interest credited to the policy. Explanation. In permanent life insurance policies, a portion of the premium payments contributes to the policy's cash value accumulation. This cash value grows tax deferred over time based on the premiums paid and the interest credited to the policy by the insurance company. Policyholders can access the cash value through policy loans or withdrawals, providing a valuable financial asset within the life insurance policy. Question 16. What are surrender charges and penalties for early policy termination in life insurance? A. Surrender charges are fees imposed by the beneficiary upon the insured's death, and penalties are applied for late premium payments. B. Surrender charges are deducted from the policy's cash value upon early termination, and penalties may apply if the policyholder withdraws funds within a certain period. C. Surrender charges are premiums paid to maintain coverage after the policy term expires, and penalties are interest rates applied to overdue payments. D. Surrender charges are government taxes levied on life insurance policies, and penalties are fines for violating policy terms. Correct answer. B. Surrender charges are deducted from the policy's cash value upon early termination, and penalties may apply if the policyholder withdraws funds within a certain period. Explanation. Surrender charges are fees deducted from the cash value of a life insurance policy if the policyholder decides to terminate the policy prematurely. These charges are designed to cover administrative costs and commissions. Additionally, penalties may apply if the policyholder accesses the cash value through a policy loan or withdrawal within a specific period after policy issuance. Understanding surrender charges and penalties is crucial for policyholders considering early policy termination. Question 17. What are policy loans in life insurance, and what are their implications for policy owners? A. Policy loans are interest-free loans provided by insurance companies, allowing policy owners to borrow against the policy's cash value without repayment obligations. B. Policy loans are loans taken against the cash value of a life insurance policy, with interest charged on the borrowed amount and potential impacts on the policy's death benefit if not repaid. C. Policy loans are grants issued to policy owners for medical expenses, with no repayment obligations. D. Policy loans are optional cash withdrawals from the policy's cash value, impacting the policy's term but not the death benefit. Correct answer. B. Policy loans are loans taken against the cash value of a life insurance policy, with interest charged on the borrowed amount and potential impacts on the policy's death benefit if not repaid. Explanation. Policy loans allow policyholders to borrow funds against the cash value of a life insurance policy. These loans typically accrue interest and must be repaid to avoid reducing the policy's cash value and death benefit. If the loan amount plus accrued interest exceeds the policy's cash value, it may result in policy lapse or reduced benefits. Policy owners should carefully consider the implications of policy loans on their coverage and long-term financial planning. Question 18. What rights do policy owners have regarding changing beneficiaries, assigning, or transferring life insurance policies? A. Policy owners have no rights to change beneficiaries once designated, and policies cannot be assigned or transferred. B. Policy owners have the right to change beneficiaries at any time, and policies can be assigned or transferred with the insurer's approval. C. Policy owners must obtain court approval to change beneficiaries, and policies cannot be assigned or transferred. D. Policy owners can only assign or transfer policies upon policy expiration, and changing beneficiaries requires written consent from the insurer. Correct answer. B. Policy owners have the right to change beneficiaries at any time, and policies can be assigned or transferred with the insurer's approval. Explanation. Policy owners have significant rights related to life insurance policies, including the ability to change beneficiaries at any time. Additionally, policies can typically be assigned or transferred to other parties with the insurer's approval. Assigning a policy involves transferring ownership rights to another individual or entity, while transferring a policy means moving coverage to a new policyholder. Understanding these rights empowers policy owners to make informed decisions regarding their life insurance coverage. Question 19. Which of the following is a common annuity payout option that provides payments for the lifetime of the annuitant only? A. Joint life with survivorship. B. Period certain. C. Life with refund. D. Life only. Correct answer. D. Life only. Explanation. An annuity payout option that provides payments for the lifetime of the annuitant only is known as life only. Under this option, payments cease upon the death of the annuitant, regardless of whether the full principal has been paid out. This option is suitable for individuals seeking maximum income during their lifetime without survivor benefits. Question 20. What are the tax implications of annuity withdrawals and distributions? A. Withdrawals and distributions from annuities are always tax-free. B. Only partial withdrawals are subject to taxation, while full annuity distributions are tax-free. C. Annuity withdrawals and distributions are generally subject to income tax on the earnings portion. D. Annuity distributions are taxed at a higher rate compared to other retirement income sources. Correct answer. C. Annuity withdrawals and distributions are generally subject to income tax on the earnings portion. Explanation. Annuity withdrawals and distributions are typically subject to income tax, particularly on the earnings portion of the payments. The earnings portion is considered taxable income in the year it is received, while the principal portion, contributions, is not subject to tax. It's essential for annuity holders to understand the tax implications of withdrawals and distributions to effectively plan for retirement income. Question 21. What is an annuity surrender period, and how are surrender charges applied? A. Annuity surrender period refers to the period when annuity payments are made tax-free and surrender charges are applied to ensure tax compliance. B. Annuity surrender period is the time during which the annuitant can withdraw funds penalty-free, and surrender charges are waived during this period. C. Annuity surrender period is the duration after purchase during which surrendering the annuity may result in a penalty or surrender charge. D. Annuity surrender period is the period during which annuity payments are deferred, and surrender charges apply only if payments commence before the end of the period. Correct answer. C. Annuity surrender period is the duration after purchase during which surrendering the annuity may result in a penalty or surrender charge. Explanation. The annuity surrender period is the specific duration after purchasing an annuity during which surrendering the policy may result in a surrender charge or penalty. Surrender charges are designed to discourage early withdrawals and compensate for insurer expenses. The surrender period and associated charges vary depending on the annuity contract terms. Understanding surrender periods and charges is crucial for annuity holders considering early termination of their contracts. Question 22. What are annuity death benefits, and which beneficiary option allows the beneficiary to receive annuity payments for their lifetime? A. Lump sum payment. B. Joint and survivor option. C. Period certain option. D. Life income option. Correct answer. B. Joint and survivor option. Explanation. Annuity death benefits refer to the payments made to the beneficiary upon the death of the annuitant. The joint and survivor option is a beneficiary option that allows the beneficiary to receive annuity payments for their lifetime, even after the death of the original annuitant. This option provides continued financial support to the beneficiary, ensuring income security beyond the annuitant's lifetime. Question 23. Which of the following accurately describes insurance licensing and continuing education requirements for agents in the state of Georgia? A. Agents are required to obtain a license but are not subject to continuing education requirements. B. Agents must pass a licensing exam and complete continuing education hours to renew their license. C. Agents are exempt from licensing requirements if they have relevant industry experience. D. Licensing requirements in Georgia are determined solely by federal regulations. Correct answer. B. Agents must pass a licensing exam and complete continuing education hours to renew their license. Explanation. In Georgia, insurance agents are required to obtain a license by passing a licensing exam specific to the type of insurance they wish to sell. Additionally, agents must complete continuing education hours regularly to renew their license. These requirements ensure that agents remain knowledgeable about industry updates, laws, and regulations, enhancing consumer protection and professionalism within the insurance industry. Question 24. What is the role of state insurance departments in regulating insurance practices within Georgia? A. State insurance departments oversee federal insurance regulations. B. State insurance departments primarily handle insurance claims and disputes. C. State insurance departments enforce state-specific insurance laws and regulations. D. State insurance departments provide financial assistance to insurance companies. Correct answer. C. State insurance departments enforce state-specific insurance laws and regulations. Explanation. State insurance departments play a crucial role in regulating insurance practices within Georgia. They enforce state-specific insurance laws and regulations, ensuring compliance with consumer protection standards, licensing requirements, and market conduct. State insurance departments are responsible for overseeing insurers operating within the state, maintaining market stability, and protecting policyholders' interests. Question 25. Which entity is primarily responsible for regulating insurance rates and forms in the state of Georgia? A. Federal Insurance Commission, FIC. B. State Insurance Department of Georgia. C. National Association of Insurance Commissioners, NAIC. D. U.S. Department of Commerce. Correct answer. B. State Insurance Department of Georgia. Explanation. In Georgia, the State Insurance Department is primarily responsible for regulating insurance rates and forms. This includes reviewing and approving insurance policy rates and forms to ensure they comply with state laws and protect consumer interests. The department oversees insurance practices within the state and plays a crucial role in maintaining a fair and stable insurance market. Question 26. Which measure is commonly used for insurance fraud prevention and detection in Georgia? A. Public awareness campaigns. B. Biometric authentication for policyholders. C. Collaboration with law enforcement agencies. D. Routine policy audits by insurance companies. Correct answer. C. Collaboration with law enforcement agencies. Explanation. Insurance fraud prevention and detection in Georgia often involve collaboration between insurance companies and law enforcement agencies. This partnership allows for the investigation and prosecution of fraudulent insurance activities, protecting both insurers and policyholders. Law enforcement agencies play a critical role in identifying and deterring fraudulent schemes within the insurance industry. Question 27. What is considered a conflict of interest in insurance sales and recommendations? A. Offering multiple insurance products to clients. B. Receiving commissions from insurance carriers. C. Failing to disclose relationships that may influence recommendations. D. Providing discounted premiums to policyholders. Correct answer. C. Failing to disclose relationships that may influence recommendations. Explanation. A conflict of interest in insurance sales occurs when an insurance agent fails to disclose relationships that may influence their recommendations to clients. This could include receiving commissions from insurance carriers or having financial ties to specific products or providers. It's important for insurance professionals to maintain transparency and act in the best interest of their clients to avoid conflicts of interest and ensure ethical conduct. Question 28. What ethical considerations are important in underwriting and claims handling in Georgia? A. Maximizing profits for the insurance company. B. Applying consistent underwriting standards to all applicants. C. Approving claims without proper verification. D. Excluding certain demographics from coverage. Correct answer. B. Applying consistent underwriting standards to all applicants. Explanation. In Georgia, ethical considerations in underwriting and claims handling require insurance professionals to apply consistent underwriting standards to all applicants. This means evaluating applicants based on relevant factors such as health history, without discrimination or bias. Fair and consistent underwriting practices ensure that insurance coverage is offered fairly and transparently to all individuals. Question 29. What are the professional codes of conduct for insurance agents and brokers in Georgia? A. Following state regulations only. B. Providing misleading information to clients. C. Acting in the best interest of clients. D. Charging excessive fees for services. Correct answer. C. Acting in the best interest of clients. Explanation. In Georgia, insurance agents and brokers are expected to adhere to professional codes of conduct that require them to act in the best interest of their clients. This includes providing accurate information, recommending suitable products, and disclosing any conflicts of interest. Upholding professional ethics builds trust between agents and clients, fostering a positive relationship within the insurance industry. Question 30. What are some ethical issues to consider in insurance marketing and advertising in Georgia? A. Using deceptive tactics to attract clients. B. Making false promises about policy benefits. C. Providing clear and accurate information to consumers. D. Targeting specific demographics unfairly. Correct answer. C. Providing clear and accurate information to consumers. Explanation. Ethical issues in insurance marketing and advertising in Georgia revolve around providing clear and accurate information to consumers. Agents and insurers must avoid deceptive tactics, false promises, or targeting vulnerable populations unfairly. Adhering to ethical guidelines ensures that consumers make informed decisions about insurance products and services, promoting integrity and transparency in the industry. Question 31. Which of the following best describes the characteristics of an HMO, Health Maintenance Organization, plan in Georgia? A. Offers flexibility to see specialists without referrals. B. Provides coverage through a network of healthcare providers. C. Typically has higher out-of-pocket costs for services. D. Offers the most freedom in choosing healthcare providers. Correct answer. B. Provides coverage through a network of healthcare providers. Explanation. In Georgia, an HMO, Health Maintenance Organization, plan provides coverage through a network of healthcare providers. Members typically choose a primary care physician, PCP, within the network and require referrals to see specialists. HMOs often emphasize preventive care and may have lower out-of-pocket costs compared to other plans, but they require members to use network providers for non-emergency services. Question 32. What type of health insurance plan is Medicare in Georgia? A. Group health insurance plan for employees. B. Government-sponsored health insurance for individuals aged 65 and older. C. Exclusive Provider Organization, EPO, plan. D. Private insurance plan for low-income individuals. Correct answer. B. Government-sponsored health insurance for individuals aged 65 and older. Explanation. Medicare is a government-sponsored health insurance program in Georgia that primarily serves individuals aged 65 and older, as well as certain younger individuals with disabilities. It consists of different parts, e.g., Part A, Part B, Part D, that cover hospital insurance, medical insurance, and prescription drugs. Medicare is administered by the federal government and provides essential healthcare coverage to eligible individuals. Question 33. What distinguishes a preferred provider organization, PPO, plan from other health insurance plans in Georgia? A. Requires members to choose a primary care physician, PCP. B. Provides coverage only for emergency services. C. Offers flexibility to see any healthcare provider with varying costs. D. Does not require copayments for doctor visits. Correct answer. C. Offers flexibility to see any healthcare provider with varying costs. Explanation. In Georgia, a preferred provider organization, PPO, plan offers flexibility to see any healthcare provider, whether they are in-network or out-of-network. However, costs are typically lower when members use in-network providers. PPO plans do not require referrals to see specialists and generally offer more freedom of choice compared to HMOs. Members may have higher out-of-pocket costs for services received from out-of-network providers. Question 34. Which of the following describes a common health insurance policy provision related to deductibles? A. The amount paid by the insured for each covered service after meeting the deductible. B. The maximum amount the insured has to pay out of pocket in a policy year. C. A fixed dollar amount that the insured must pay before the insurance company begins to cover expenses. D. The percentage of covered expenses that the insured must pay after meeting the deductible. Correct answer. C. A fixed dollar amount that the insured must pay before the insurance company begins to cover expenses. Explanation. In health insurance policies in Georgia, a deductible is a specified amount of money that the insured must pay out of pocket before the insurance company starts paying for covered medical services. It is usually an annual amount and can vary based on the policy. Once the deductible is met, the insurance company will cover a percentage or all of the remaining eligible expenses, subject to other policy terms. Question 35. What does the term coinsurance refer to in health insurance policies? A. The portion of covered medical expenses paid by the insured after the deductible is met. B. A fixed amount paid by the insured for each medical service. C. The maximum amount the insured is required to pay out of pocket in a policy year. D. The total amount of money the insurance company will pay for covered services. Correct answer. A. The portion of covered medical expenses paid by the insured after the deductible is met. Explanation. Coinsurance is the percentage of covered medical expenses that the insured is required to pay after the deductible has been met. For example, if the coinsurance is 20%, the insured pays 20% of covered expenses, and the insurance company pays the remaining 80%. Coinsurance helps share the cost of healthcare between the insured and the insurance company. Question 36. What are coverage limits in a health insurance policy? A. The maximum amount the insured has to pay out of pocket in a policy year. B. The total dollar amount the insurance company will pay for covered services. C. The percentage of covered expenses that the insured must pay after meeting the deductible. D. Specific conditions or circumstances under which the insurance company will not provide benefits. Correct answer. B. The total dollar amount the insurance company will pay for covered services. Explanation. Coverage limits refer to the maximum dollar amount that the insurance company will pay for covered medical services over a certain period, e.g., per year, per lifetime. These limits may apply to specific services, types of treatments, or overall coverage. Exceeding coverage limits may result in the insured being responsible for paying additional expenses, so it's important to understand these limits when choosing a health insurance plan. Question 37. Which of the following best describes the underwriting process for health insurance? A. Reviewing claims history to determine premium rates. B. Evaluating an applicant's health status and medical history. C. Issuing policies without assessing the applicant's risk. D. Setting deductibles for policyholders based on age. Correct answer. B. Evaluating an applicant's health status and medical history. Explanation. In health insurance underwriting, insurers assess an applicant's health status and medical history to determine the level of risk they present. This evaluation helps insurers set appropriate premium rates and coverage levels based on the likelihood of claims being made. Underwriters consider factors such as pre-existing conditions, lifestyle choices, age, and other health-related information during this process. Question 38. What factors typically affect the insurability of an applicant for health insurance? A. Marital status and number of dependents. B. Income level and employment history. C. Health status, age, and lifestyle choices. D. Vehicle ownership and driving record. Correct answer. C. Health status, age, and lifestyle choices. Explanation. The insurability of an applicant for health insurance is primarily influenced by factors related to their health, age, and lifestyle. Insurers assess these factors to determine the risk associated with providing coverage to an individual. Health status, including pre-existing conditions, age, and lifestyle choices such as smoking or exercise habits, significantly impact insurability and premium rates. Question 39. What does risk selection and classification refer to in health insurance underwriting? A. Categorizing policyholders based on geographic location. B. Assigning risk levels to applicants and determining appropriate premiums. C. Offering discounts based on policyholder loyalty. D. Determining claim eligibility for specific medical procedures. Correct answer. B. Assigning risk levels to applicants and determining appropriate premiums. Explanation. Risk selection and classification involves assessing the level of risk associated with insuring an individual and assigning them to specific risk categories. Insurers use this information to set appropriate premiums that reflect the expected cost of providing coverage to different risk groups. This process helps insurers manage their overall risk exposure and ensure fairness in pricing based on the applicant's health and other relevant factors. Question 40. Which statement accurately describes the relationship between state and federal regulations governing health insurance in Georgia? A. State regulations always supersede federal regulations in health insurance matters. B. Federal regulations take precedence over state regulations when there is a conflict. C. State and federal regulations have no impact on health insurance policies in Georgia. D. State regulations are only applicable to certain types of health insurance plans. Correct answer. B. Federal regulations take precedence over state regulations when there is a conflict. Explanation. In Georgia, health insurance regulations are governed by both state and federal laws. When federal and state regulations conflict, federal law generally takes precedence due to the supremacy clause of the U.S. Constitution. However, states also have the authority to regulate certain aspects of health insurance within their borders, provided they do not conflict with federal laws like the Affordable Care Act, ACA. Question 41. Which of the following provisions is included in the Affordable Care Act, ACA? A. Mandating lifetime limits on essential health benefits. B. Allowing insurers to deny coverage based on pre-existing conditions. C. Requiring dependent coverage up to age 26 on parents' health plans. D. Permitting annual coverage limits on preventive services. Correct answer. C. Requiring dependent coverage up to age 26 on parents' health plans. Explanation. The Affordable Care Act, ACA, includes several provisions aimed at improving access to healthcare and insurance coverage. One key provision is allowing young adults to remain on their parents' health insurance plans until the age of 26, providing extended coverage for dependents. This provision has significantly expanded insurance coverage among young adults in the United States. Question 42. What do HIPAA regulations primarily focus on in relation to health insurance? A. Setting guidelines for health insurance premiums and deductibles. B. Regulating the privacy and security of individuals' health information. C. Mandating specific coverage requirements for health insurers. D. Standardizing health insurance claim forms across the industry. Correct answer. B. Regulating the privacy and security of individuals' health information. Explanation. HIPAA, Health Insurance Portability and Accountability Act, regulations primarily focus on protecting the privacy and security of individuals' health information. This includes establishing rules for the use and disclosure of protected health information, by covered entities, such as health insurers and healthcare providers. HIPAA aims to ensure that individuals' medical information remains confidential and secure. Question 43. Which statement accurately describes the purpose of health insurance exchanges, marketplaces, in Georgia? A. Health insurance exchanges are designed to provide free healthcare services to eligible residents. B. Health insurance exchanges allow individuals and small businesses to compare and purchase health insurance plans. C. Health insurance exchanges regulate the pricing of prescription drugs in the state. D. Health insurance exchanges provide direct medical care to uninsured individuals. Correct answer. B. Health insurance exchanges allow individuals and small businesses to compare and purchase health insurance plans. Explanation. Health insurance exchanges, also known as marketplaces, facilitate the purchase of health insurance plans for individuals and small businesses. These exchanges offer a platform where consumers can compare various health insurance options based on coverage, benefits, and cost, and select plans that best meet their needs. In Georgia, the health insurance marketplace plays a crucial role in expanding access to insurance coverage and promoting healthcare affordability. Question 44. What is a special enrollment period in Georgia's health insurance marketplace? A. A designated time period during which individuals can enroll in Medicaid coverage. B. A period when individuals can change their health insurance plans without any restrictions. C. An extended enrollment period for certain qualifying life events, such as marriage or birth of a child. D. A time frame when individuals can enroll in a health savings account, HSA. Correct answer. C. An extended enrollment period for certain qualifying life events, such as marriage or birth of a child. Explanation. In Georgia's health insurance marketplace, a special enrollment period, SEP, allows individuals to enroll in or change health insurance plans outside of the regular open enrollment period. This special period is triggered by specific qualifying life events, such as marriage, birth or adoption of a child, loss of other coverage, or a change in household size. During the SEP, eligible individuals have the opportunity to enroll in a health insurance plan or make changes to their existing coverage. Question 45. What role do subsidies and premium tax credits play in Georgia's health insurance marketplace? A. Subsidies and tax credits provide financial assistance to insurance companies in the state. B. Subsidies and tax credits help eligible individuals and families afford health insurance premiums. C. Subsidies and tax credits determine the eligibility criteria for Medicaid coverage. D. Subsidies and tax credits regulate the maximum out-of-pocket expenses for insured individuals. Correct answer. B. Subsidies and tax credits help eligible individuals and families afford health insurance premiums. Explanation. Subsidies and premium tax credits are financial assistance programs offered through Georgia's health insurance marketplace to help eligible individuals and families afford health insurance coverage. These subsidies are based on income levels and are designed to reduce the cost of monthly insurance premiums for qualified enrollees. Premium tax credits are applied directly to the premium costs, making health insurance more affordable and accessible to those who qualify. Question 46. Which of the following statements best describes a managed care organization? MCO, in the context of health insurance in Georgia? A. MCOs are private organizations that provide financial assistance for healthcare expenses. B. MCOs are entities that offer health insurance plans primarily for government employees in Georgia. C. MCOs are healthcare delivery systems that coordinate and manage medical services for enrolled members. D. MCOs are state-run programs that offer free healthcare coverage to low-income individuals. Correct answer. C. MCOs are healthcare delivery systems that coordinate and manage medical services for enrolled members. Explanation. In Georgia, a managed care organization, MCO, refers to a healthcare delivery system that contracts with healthcare providers to coordinate and manage medical services for individuals enrolled in their health plans. MCOs aim to improve the quality of care, control costs, and enhance patient outcomes by emphasizing preventive care, wellness programs, and care coordination among participating providers. Question 47. What is a key characteristic of network structures and provider contracting within managed care organizations, MCOs, operating in Georgia? A. MCOs do not have exclusive contracts with healthcare providers. B. MCOs negotiate discounted rates with a broad network of healthcare providers. C. MCOs limit access to healthcare services by restricting provider choices. D. MCOs primarily contract with solo practitioners and independent clinics. Correct answer. B. MCOs negotiate discounted rates with a broad network of healthcare providers. Explanation. In Georgia, MCOs establish network structures by contracting with a diverse range of healthcare providers, including hospitals, physicians, specialists, and ancillary service providers. These contracts allow MCOs to negotiate discounted reimbursement rates in exchange for increased patient volume, ensuring that members have access to a comprehensive network of healthcare services at reduced costs. Question 48. What role does utilization review play in managed care techniques implemented by organizations operating in Georgia's health insurance market? A. Utilization review focuses on minimizing patient access to essential healthcare services. B. Utilization review involves assessing the appropriateness and necessity of healthcare services. C. Utilization review is used to expand coverage options for members of managed care plans. D. Utilization review determines eligibility criteria for enrollment in managed care organizations. Correct answer. B. Utilization review involves assessing the appropriateness and necessity of healthcare services. Explanation. Utilization review is a critical managed care technique utilized by organizations in Georgia to evaluate the medical necessity and appropriateness of healthcare services provided to members. This process helps ensure that healthcare resources are used efficiently and effectively, promoting quality care while controlling costs. Utilization review may involve pre-authorization of certain services, concurrent reviews during treatment, and retrospective assessments to optimize healthcare outcomes for members. Question 49. In Georgia, what is the primary purpose of claims processing and adjudication in the context of health insurance? A. To deny all submitted claims to control costs. B. To ensure that only emergency claims are processed promptly. C. To accurately assess and pay eligible healthcare expenses covered by the insurance plan. D. To expedite claim payments without verifying services rendered. Correct answer. C. To accurately assess and pay eligible healthcare expenses covered by the insurance plan. Explanation. In Georgia, claims processing and adjudication involve the systematic review and assessment of submitted healthcare claims to determine the coverage eligibility under the insurance plan. The primary goal is to accurately evaluate and pay for eligible healthcare services, ensuring that policyholders receive timely reimbursements for covered expenses based on the terms and conditions outlined in their insurance policy. Question 50. What information is typically included in an explanation of benefits, EOB, or claims statement provided to policyholders in Georgia? A. Only the total amount paid by the policyholder for healthcare services. B. Detailed breakdown of medical services rendered without financial details. C. Summary of claim details, including healthcare services, provider charges, and insurance coverage. D. Personal health history of the policyholder unrelated to the specific claim. Correct answer. C. Summary of claim details, including healthcare services, provider charges, and insurance coverage. Explanation. An explanation of benefits, EOB, or claim statement in Georgia typically includes a comprehensive summary of the claim, including details such as the healthcare services received, charges billed by the healthcare provider, the amount covered by insurance, any deductible or copayment due from the policyholder, and the total reimbursement or payment made by the insurance company. This document helps policyholders understand the status of their claims and how insurance coverage applies to specific healthcare services. Question 51. What measures are implemented in Georgia to prevent and detect health insurance fraud related to claims processing? A. Requiring policyholders to personally verify all submitted claims. B. Mandating healthcare providers to charge excessive fees for services rendered. C. Utilizing data analytics and monitoring systems to identify unusual claim patterns. D. Allowing anonymous individuals to process claims without accountability. Correct answer. C. Utilizing data analytics and monitoring systems to identify unusual claim patterns. Explanation. In Georgia, health insurance fraud prevention and detection efforts involve the use of advanced data analytics and monitoring systems by insurance companies and regulatory authorities. These systems analyze claim data to identify unusual patterns, discrepancies, or suspicious activities that may indicate fraudulent behavior. By proactively detecting fraud through data analysis, insurance companies can protect policyholders and maintain the integrity of the insurance system. Question 52. What ethical considerations are important in health insurance sales and service in Georgia? A. Offering discounts to individuals based on their medical history. B. Misrepresenting policy terms or coverage to potential clients. C. Recommending policies that align with the client's needs and financial situation. D. Pressuring clients to purchase unnecessary coverage for higher commissions. Correct answer. C. Recommending policies that align with the client's needs and financial situation. Explanation. In Georgia, ethical practices in health insurance sales and service emphasize recommending policies that genuinely meet the client's healthcare needs and financial circumstances. Agents should avoid misrepresentation, coercion, or discriminatory practices and focus on providing accurate information, transparent communication, and suitable coverage options aligned with the client's best interests. Question 53. What consumer rights and protections are guaranteed under Georgia's health insurance regulations? A. Unlimited waiting periods for coverage to begin after enrollment. B. Right to request detailed information about policy benefits and exclusions. C. Requirement to accept any coverage offered without reviewing terms. D. Mandatory cancellation of policies without client consent. Correct answer. B. Right to request detailed information about policy benefits and exclusions. Explanation. Georgia's health insurance regulations uphold consumer rights by granting individuals the right to request comprehensive information about policy benefits, coverage limitations, exclusions, and terms before making enrollment decisions. This transparency empowers consumers to make informed choices and ensures they understand the terms and conditions of their health insurance coverage. Question 54. What constitutes fair marketing and sales practices in the context of health insurance in Georgia? A. Providing misleading information about competitors' products. B. Offering incentives to clients for purchasing specific insurance plans. C. Clearly disclosing policy terms, benefits, and limitations to potential clients. D. Coercing clients into signing insurance contracts without review. Correct answer. C. Clearly disclosing policy terms, benefits, and limitations to potential clients. Explanation. Fair marketing and sales practices in Georgia's health insurance sector emphasize clear and transparent communication with potential clients. This includes disclosing policy terms, benefits, limitations, and exclusions upfront, without misleading information or undue pressure to purchase specific plans. Agents should prioritize consumer education and ensure that clients have a complete understanding of the insurance products being offered. Question 55. Which supplemental health insurance product typically covers routine dental checkups and procedures? A. Vision insurance. B. Disability insurance. C. Dental insurance. D. Critical illness insurance. Correct answer. C. Dental insurance. Explanation. Dental insurance is a common supplemental health insurance product that covers routine dental care, including checkups, cleanings, fillings, and other dental procedures. It helps individuals manage dental expenses beyond what may be covered under their primary health insurance plan. Question 56. What are optional policy riders and endorsements used for in health insurance? A. They provide automatic premium discounts. B. They expand or modify the coverage of a base policy. C. They require policyholders to purchase additional coverage. D. They are mandatory additions to all health insurance policies. Correct answer. B. They expand or modify the coverage of a base policy. Explanation. Optional policy riders and endorsements are used to expand or modify the coverage of a base health insurance policy according to the policyholder's needs. They offer flexibility by allowing individuals to tailor their coverage with additional benefits or protections beyond the standard policy terms. Question 57. Which type of insurance provides coverage for expenses related to serious illnesses like cancer or heart disease? A. Long-term care insurance. B. Vision insurance. C. Critical illness insurance. D. Disability insurance. Correct answer. C. Critical illness insurance. Explanation. Critical illness insurance is designed to provide financial support in the event of a serious illness diagnosis, such as cancer, heart attack, or stroke. It pays out a lump sum benefit that can be used to cover medical expenses, treatment costs, and other financial obligations during recovery, offering peace of mind during challenging health situations. Question 58. What are the tax implications of health insurance premiums paid by individuals in Georgia? A. Health insurance premiums are tax-deductible for all individuals. B. Health insurance premiums are never tax-deductible for individuals. C. Health insurance premiums are tax-deductible only for self-employed individuals. D. Health insurance premiums are tax-deductible only for low-income individuals. Correct answer. C. Health insurance premiums are tax-deductible only for self-employed individuals. Explanation. In Georgia, health insurance premiums paid by self-employed individuals are generally tax-deductible as a business expense. This deduction is subject to specific IRS rules and limitations. However, health insurance premiums for individuals who are not self-employed are typically not tax-deductible as an itemized deduction on federal tax returns. Question 59. Which federal agency oversees compliance with IRS regulations related to health insurance? A. Centers for Medicare and Medicaid Services, CMS. B. Department of Health and Human Services, HHS. C. Internal Revenue Service, IRS. D. Federal Trade Commission, FTC. Correct answer. C. Internal Revenue Service, IRS. Explanation. The Internal Revenue Service, IRS, is responsible for enforcing compliance with tax regulations related to health insurance. This includes rules regarding the tax treatment of health insurance premiums, benefits, and other aspects of health insurance coverage. Agents and insurers in Georgia must adhere to IRS guidelines to ensure compliance. Question 60. What are the reporting requirements for insurers and policyholders regarding health insurance benefits in Georgia? A. Insurers must report benefits paid to policyholders, and policyholders must report premium payments on their tax returns. B. Insurers must report premium payments received from policyholders, and policyholders must report benefits received on their tax returns. C. Insurers must report policy cancellations, and policyholders must report deductible expenses. D. Insurers must report deductible expenses, and policyholders must report premium payments on their tax returns. Correct answer. B. Insurers must report premium payments received from policyholders, and policyholders must report benefits received on their tax returns. Explanation. In Georgia, insurers are required to report premium payments they receive from policyholders to the IRS. Policyholders, on the other hand, must report any benefits received from their health insurance coverage on their tax returns. This reporting helps ensure compliance with tax laws and regulations governing health insurance. Question 61. What is one of the key benefits associated with telemedicine and remote healthcare services in Georgia? A. Decreased access to healthcare providers. B. Reduced healthcare costs for patients. C. Limited coverage by health insurance plans. D. Inability to receive prescriptions remotely. Correct answer. B. Reduced healthcare costs for patients. Explanation. In Georgia, one of the primary benefits of telemedicine and remote healthcare services is the potential for reducing healthcare costs for patients. By allowing individuals to consult with healthcare providers remotely, unnecessary visits to hospitals or clinics can be avoided, leading to cost savings. This trend aligns with efforts to improve access to care, especially in rural or underserved areas of the state. Question 62. Which concept is associated with value-based care models in Georgia? A. Fee-for-service reimbursement. B. Volume-based care incentives. C. Paying for the quantity of services provided. D. Paying for the quality and outcomes of care. Correct answer. D. Paying for the quality and outcomes of care. Explanation. Value-based care models in Georgia emphasize paying healthcare providers based on the quality and outcomes of care delivered, rather than the volume of services provided, fee for service. This approach aims to improve patient outcomes, enhance coordination among providers, and reduce unnecessary healthcare costs. It reflects a shift towards more efficient and effective healthcare delivery. Question 63. How do technological innovations contribute to healthcare delivery in Georgia? A. By increasing administrative burdens. B. By reducing patient engagement. C. By improving access to healthcare services. D. By limiting data sharing among providers. Correct answer. C. By improving access to healthcare services. Explanation. Technological innovations, such as electronic health records, EHRs, telemedicine platforms, and mobile health applications, play a vital role in improving access to healthcare services in Georgia. These innovations enable remote consultations, streamline administrative processes, and facilitate better coordination of care among providers. They contribute to more efficient and patient-centered healthcare delivery across the state. Question 64. What type of life insurance policy provides coverage for a specified period of time and pays a death benefit if the insured passes away during the term? A. Universal life insurance policy. B. Whole life insurance policy. C. Variable life insurance policy. D. Term life insurance policy. Correct answer. D. Term life insurance policy. Explanation. In Georgia, term life insurance policies offer coverage for a specific duration, such as 10, 20, or 30 years. If the insured individual dies within the term of the policy, a death benefit is paid to the beneficiary. Term life insurance is typically more affordable compared to permanent life insurance policies and is suitable for individuals seeking temporary coverage for financial obligations like mortgage payments or children's education. Question 65. Which type of life insurance policy offers flexible premium payments and an adjustable death benefit, along with a cash value component that earns interest based on current market rates? A. Whole life insurance policy. B. Term life insurance policy. C. Variable life insurance policy. D. Universal life insurance policy. Correct answer: D. Universal life insurance policy. Explanation: Universal life insurance policies in Georgia provide policyholders with flexibility in premium payments and the ability to adjust the death benefit over time. These policies also accumulate cash value that earns interest based on prevailing market rates. Policyholders can use the cash value to cover premiums or withdraw funds during their lifetime, subject to certain conditions. Question 66. What is a distinguishing feature of whole life insurance policies in Georgia? A. They have a fixed premium that never changes. B. They offer investment options to policyholders. C. They provide coverage for a specific term only. D. They are renewable annually. Correct answer: A. They have a fixed premium that never changes. Explanation: Whole life insurance policies in Georgia have a unique characteristic of a fixed premium that remains consistent throughout the life of the policy. This stability makes it easier for policyholders to budget for insurance costs over the long term. Whole life policies also accumulate cash value over time, which policyholders can access through loans or withdrawals. These policies provide permanent coverage as long as premiums are paid. Question 67. What key feature distinguishes variable life insurance policies from other types of life insurance? A. Guaranteed fixed premiums. B. Investment component with subaccounts. C. Flexible death benefit options. D. No cash value accumulation. Correct answer: B. Investment component with subaccounts. Explanation: In Georgia, variable life insurance policies offer policyholders the opportunity to allocate a portion of their premiums into separate investment accounts known as subaccounts. These subaccounts function similarly to mutual funds and allow policyholders to invest in various asset classes like stocks, bonds, or money market instruments. The cash value of a variable life policy fluctuates based on the performance of these investments, providing potential for higher returns but also exposing the policy to investment risks. Question 68. What is the primary purpose of a final expense insurance policy? A. To provide coverage for mortgage payments. B. To cover funeral and burial expenses. C. To accumulate cash value over time. D. To replace lost income for beneficiaries. Correct answer: B. To cover funeral and burial expenses. Explanation: Final expense insurance policies, also known as burial insurance or funeral insurance, are designed to cover the costs associated with a policyholder's funeral and burial upon their death. In Georgia, these policies typically have lower face values compared to traditional life insurance policies, aiming to ease the financial burden on loved ones during an emotional and difficult time. Final expense policies are often marketed to seniors and individuals seeking coverage for end-of-life expenses. Question 69. What does an accidental death benefit rider provide to the beneficiary of a life insurance policy? A. Coverage for death due to illness. B. Additional death benefit if death is accidental. C. Cash value accumulation over time. D. Premium waivers in case of disability. Correct answer: B. Additional death benefit if death is accidental. Explanation: An accidental death benefit rider, available in Georgia, supplements the base death benefit of a life insurance policy by providing an additional payout if the insured's death is the direct result of a covered accident. This rider is designed to offer extra financial protection to beneficiaries in cases of accidental death, such as car accidents, falls, or other unforeseen events. It's important to note that accidental death benefit riders have specific terms and conditions outlined in the insurance policy. Question 70. What does a critical illness rider typically provide in a life insurance policy? A. Accelerated death benefit for terminal illness. B. Additional coverage for major medical expenses. C. Lump sum benefit upon diagnosis of specified illnesses. D. Premium waiver in case of disability. Correct answer. C. Lump sum benefit upon diagnosis of specified illnesses. Explanation. In Georgia, a critical illness rider is an optional addition to a life insurance policy that offers a lump sum payment upon the insured's diagnosis of certain serious illnesses, such as cancer, heart attack, stroke, or organ transplant. This rider provides financial support to cover medical costs and other expenses associated with critical illnesses, supplementing the insured's primary health insurance coverage. The benefit is typically paid out regardless of whether the insured survives the illness. Question 71. What is the primary purpose of a disability income rider in a life insurance policy? A. Provides a lump sum benefit upon death. B. Pays a monthly benefit if the insured becomes disabled. C. Accelerates the death benefit for terminal illness. D. Offers coverage for long-term care expenses. Correct answer. B. Pays a monthly benefit if the insured becomes disabled. Explanation. In Georgia, a disability income rider is designed to provide an additional source of income if the insured becomes disabled and unable to work. This rider offers monthly payments to replace lost income due to disability, helping the insured maintain financial stability and meet ongoing expenses. The disability income rider can complement disability insurance policies by providing an alternative form of income protection within a life insurance policy. Question 72. What coverage does a long-term care insurance rider provide in a life insurance policy? A. Reimburses medical expenses related to chronic illnesses. B. Pays for funeral and burial expenses. C. Provides income replacement during temporary disability. D. Covers costs of long-term care services like nursing home care. Correct answer. D. Covers costs of long-term care services like nursing home care. Explanation. A long-term care insurance rider, available in Georgia, is an add-on feature to a life insurance policy that covers expenses associated with long-term care services, such as nursing home care, assisted living facilities, or in-home care. This rider helps policyholders pay for the high costs of long-term care without depleting their assets. It provides financial security and flexibility in choosing appropriate care options as needed due to chronic illness or disability. Question 73. What is the purpose of a spousal or child term rider in a life insurance policy? A. Provides coverage for the insured spouse or child under a separate policy. B. Offers additional coverage for the insured spouse or child for a specified term. C. Enables the insured to convert term life insurance into whole life insurance. D. Allows the insured to add a second beneficiary to the policy. Correct answer. B. Offers additional coverage for the insured spouse or child for a specified term. Explanation. In Georgia, a spousal or child term rider is an optional provision that allows the policyholder to add temporary life insurance coverage for their spouse or child to their existing policy. This rider provides an extra layer of financial protection by extending coverage for a specific period, typically matching the term of the primary insured's policy. It is a cost-effective way to secure life insurance for family members without the need for separate policies. Question 74. What is a common risk assessment tool used in underwriting for health insurance policies in Georgia? A. Actuarial tables. B. Credit score analysis. C. Automobile driving records. D. Business financial statements. Correct answer. A. Actuarial tables. Explanation. In Georgia, underwriters use actuarial tables as a key risk assessment tool in determining health insurance premiums and eligibility. Actuarial tables provide statistical data on mortality rates, disease prevalence, and other health-related factors, allowing insurers to calculate appropriate premium rates based on the assessed level of risk. This data-driven approach helps ensure that insurance pricing is fair and accurately reflects the underlying health risks of the insured population. Question 75. What is the primary objective of the underwriting process for different types of insurance, including property, liability, and health insurance? A. Minimize claims processing time. B. Maximize insurance company profits. C. Assess and evaluate risk. D. Expedite policy issuance. Correct answer. C. Assess and evaluate risk. Explanation. Underwriting plays a critical role in insurance by assessing and evaluating risk to determine the appropriate coverage and premium rates for policyholders. In Georgia, underwriters analyze various factors such as the applicant's health status, lifestyle, occupation, and other pertinent information to quantify the level of risk associated with insuring an individual or entity. The primary objective of underwriting is to make informed decisions that balance risk and profitability while ensuring policyholders receive adequate insurance protection. Question 76. In life insurance underwriting, what is the primary purpose of using actuarial tables and mortality tables? A. To calculate the surrender value of a policy. B. To assess the financial strength of the insurance company. C. To determine policy premiums based on risk factors. D. To predict life expectancy and mortality rates. Correct answer. D. To predict life expectancy and mortality rates. Explanation. Actuarial tables and mortality tables are essential tools used in life insurance underwriting, especially in Georgia, to predict life expectancy and mortality rates. Actuaries analyze historical data and statistical probabilities to estimate how long policyholders are likely to live, enabling insurers to set appropriate premium rates and policy terms based on the assessed level of risk. This data-driven approach ensures that insurance companies can accurately price their policies while providing adequate financial protection to policyholders. Question 77. What role does underwriting play in determining policy premiums and coverage for life insurance policies? A. Underwriting ensures compliance with state laws and regulations. B. Underwriting evaluates risk and sets appropriate premium rates. C. Underwriting assists with claims processing and policyholder inquiries. D. Underwriting determines the marketing strategy for insurance products. Correct answer. B. Underwriting evaluates risk and sets appropriate premium rates. Explanation. Underwriting is a critical process in life insurance policy issuance in Georgia, involving the evaluation of risk factors associated with potential policyholders. Underwriters assess various factors such as age, health status, lifestyle, occupation, and medical history to determine the level of risk posed by insuring an individual. Based on this risk assessment, underwriters set appropriate premium rates and coverage limits, ensuring that policy terms align with the insurer's profitability goals while providing fair and adequate protection to policyholders. Question 78. How does cash value accumulation work in permanent life insurance policies? A. Cash value accumulates at a fixed interest rate determined by the insurer. B. Cash value fluctuates based on market performance of the insurer's investment portfolio. C. Policyholders can withdraw cash value at any time without tax consequences. D. Cash value accumulation is used to pay insurance premiums. Correct answer. A. Cash value accumulates at a fixed interest rate determined by the insurer. Explanation. In Georgia, cash value accumulation is a unique feature of permanent life insurance policies, such as whole life or universal life. The cash value represents the portion of the policy's value that grows over time based on premiums paid and interest credited by the insurer. Typically, insurers guarantee a minimum fixed interest rate for cash value accumulation, ensuring steady growth over the policy's lifetime. Policyholders can access the cash value through withdrawals or policy loans, providing a valuable source of liquidity and financial flexibility. Question 79. What are surrender charges and penalties associated with in-life insurance policies? A. Fees incurred when making changes to the policy's beneficiaries. B. Penalties for policy loans taken before a specified duration. C. Charges imposed for early termination or surrender of the policy. D. Premium adjustments based on the policy's cash value accumulation. Correct answer. C. Charges imposed for early termination or surrender of the policy. Explanation. In Georgia, surrender charges are fees levied by insurance companies when policyholders terminate or surrender their life insurance policies prematurely, typically within the first few years of the policy. These charges are designed to cover the insurer's administrative costs and protect against lapses that may occur soon after policy issuance. Policyholders should be aware of surrender charges and consider them before deciding to surrender or terminate their policies, as they can significantly impact the amount of cash value received. Question 80. What implications do policy loans have for life insurance policyholders in Georgia? A. Policy loans accrue interest and reduce the policy's death benefit. B. Policy loans do not require repayment and are tax-free. C. Policy loans increase the policy's cash value without affecting benefits. D. Policy loans are only available for term life insurance policies. Correct answer. A. Policy loans accrue interest and reduce the policy's death benefit. Explanation. Policy loans allow policyholders in Georgia to borrow against the cash value of their permanent life insurance policies. However, these loans accrue interest over time and must be repaid to avoid reducing the policy's death benefit. Failure to repay policy loans can diminish the overall value of the policy and impact beneficiaries' payouts upon the insured's death. Policyholders should carefully consider the implications of taking out policy loans and ensure timely repayment to maintain the policy's financial integrity. Question 81. What rights do life insurance policy owners have regarding beneficiaries, assignment, or policy transfer in Georgia? A. Policy owners cannot change beneficiaries once named in the policy. B. Policy owners have no rights to assign or transfer their policies. C. Policy owners can change beneficiaries, assign, or transfer the policy at their discretion. D. Policy owners must seek insurer approval for any changes to their policies. Correct answer. C. Policy owners can change beneficiaries, assign, or transfer the policy at their discretion. Explanation. In Georgia, life insurance policy owners retain several important rights related to their policies. They have the authority to change beneficiaries, assign ownership, or transfer the policy to another individual or entity. These rights provide flexibility and control over the management of life insurance policies based on the policy owner's evolving needs and circumstances. It's essential for policy owners to understand and exercise these rights responsibly to ensure their life insurance coverage aligns with their long-term financial goals and intentions. Question 82. Which of the following represents an annuity payout option that continues payments for the lifetime of the annuitant, with no survivor benefits? A. Life with period certain. B. Joint life with last survivor. C. Life only. D. Joint and survivor life. Correct answer. C. Life only. Explanation. In Georgia, the life-only annuity payout option provides payments to the annuitant for their lifetime only, with no survivor benefits. This option ceases upon the annuitant's death, regardless of when payments commenced. It offers the highest payout amount compared to other options but carries the risk of payments stopping if the annuitant passes away relatively soon after starting the annuity. Question 83. What are the tax implications of annuity withdrawals and distributions in Georgia? A. Withdrawals are always tax-free, while distributions are taxable as ordinary income. B. Both withdrawals and distributions are tax-free under certain circumstances. C. Withdrawals and distributions are subject to taxation on earnings, but not on principal. D. Withdrawals and distributions are generally taxable as ordinary income, with some exceptions for non-taxable amounts. Correct answer. D. Withdrawals and distributions are generally taxable as ordinary income, with some exceptions for non-taxable amounts. Explanation. In Georgia, annuity withdrawals and distributions are typically taxed as ordinary income, with the portion attributable to earnings subject to taxation. However, there are exceptions for the return of principal, which is generally not subject to taxation. It's essential for annuity owners in Georgia to understand the tax implications of withdrawals and distributions to effectively plan their retirement income strategies. Question 84. What do annuity surrender periods and surrender charges refer to in Georgia? A. The period during which annuity payments are made to the beneficiary. B. The duration during which annuity withdrawals are allowed penalty-free. C. The period after annuity purchase during which surrendering the annuity incurs charges. D. The term during which annuity premiums must be paid to maintain coverage. Correct answer. C. The period after annuity purchase during which surrendering the annuity incurs charges. Explanation. In Georgia, annuity surrender periods refer to the duration following the purchase of an annuity during which surrendering the annuity may result in surrender charges imposed by the insurance company. Surrender charges are designed to discourage early termination of annuities and typically decrease over time until they are no longer applicable. Annuity owners should carefully consider surrender periods and associated charges before deciding to surrender their annuities to avoid unnecessary financial penalties. Question 85. Which of the following represents an annuity death benefit option that guarantees payments for a certain period, even if the annuitant passes away? A. Joint and survivor annuity. B. Life-only annuity. C. Period certain annuity. D. Deferred annuity. Correct answer. C. Period certain annuity. Explanation. In Georgia, a period certain annuity provides a death benefit guaranteeing payments for a specified period, such as 10 or 20 years, regardless of whether the annuitant survives the period. If the annuitant dies within the specified period, payments continue to the designated beneficiary until the end of the period certain. This option can provide added security for beneficiaries and is a common feature in annuity contracts. Question 86. What are the insurance licensing and continuing education requirements for insurance agents in Georgia? A. Agents are required to pass a national licensing exam and complete continuing education every 5 years. B. Agents must obtain a state-specific license but are exempt from continuing education requirements. C. Agents need to complete a pre-licensing course and pass a state exam, with ongoing continuing education obligations. D. Licensing requirements for agents are solely determined by federal regulations. Correct answer. C. Agents need to complete a pre-licensing course and pass a state exam, with ongoing continuing education obligations. Explanation. In Georgia, insurance agents must complete a state-approved pre-licensing course and pass a state licensing exam to obtain an insurance license. Additionally, agents are required to fulfill continuing education requirements periodically to maintain their license. These continuing education obligations ensure that agents stay updated with changes in insurance laws, regulations, and products, enabling them to provide accurate and informed services to clients. Question 87. What is the role of state insurance departments in Georgia? A. State insurance departments oversee federal insurance regulations. B. State insurance departments enforce international insurance standards. C. State insurance departments regulate insurance companies operating within the state. D. State insurance departments administer federal health insurance programs. Correct answer. C. State insurance departments regulate insurance companies operating within the state. Explanation. In Georgia, the state insurance department plays a crucial role in regulating insurance companies and agents operating within the state. This includes licensing and overseeing insurance companies, ensuring compliance with state insurance laws, investigating consumer complaints, and promoting consumer protection. State insurance departments work closely with national regulatory bodies but primarily focus on regulating insurance activities within their respective states to safeguard policyholders and ensure a fair insurance marketplace. Question 88. What is the primary role of state insurance departments in regulating insurance rates and forms in Georgia? A. Setting national insurance rate standards. B. Approving insurance policies before they can be sold to consumers. C. Monitoring and reviewing insurance rates and forms to ensure they are fair and compliant with state laws. D. Enforcing federal regulations on insurance rates and forms. Correct answer. C. Monitoring and reviewing insurance rates and forms to ensure they are fair and compliant with state laws. Explanation. In Georgia, state insurance departments oversee the regulation of insurance rates and forms by monitoring and reviewing them to ensure compliance with state laws. This includes assessing whether insurance rates are fair and not discriminatory, and ensuring that insurance policies, forms, meet legal requirements and provide adequate coverage to consumers. State oversight helps protect consumers from unfair pricing practices and ensures transparency in insurance transactions. Question 89. Which of the following is a key measure for preventing and detecting insurance fraud in Georgia? A. Requiring insurers to provide free insurance policies to consumers. B. Implementing strict penalties for insurance agents who sell policies below market rates. C. Establishing special investigation units within insurance companies to investigate suspicious claims. D. Requiring consumers to purchase insurance directly from the state insurance department. Correct answer. C. Establishing special investigation units within insurance companies to investigate suspicious claims. Explanation. In Georgia, one of the effective measures for preventing and detecting insurance fraud is establishing special investigation units, SIUs, within insurance companies. These units are responsible for investigating suspicious claims, identifying potential fraud indicators, and collaborating with law enforcement agencies to prosecute fraudulent activities. SIUs play a crucial role in maintaining the integrity of the insurance industry and protecting policyholders from fraudulent claims. Question 90. Which ethical issue relates to conflicts of interest in insurance sales and recommendations in Georgia? A. Agents receiving commissions for selling insurance policies. B. Agents offering discounts on insurance premiums to attract clients. C. Agents recommending insurance products solely based on personal financial gain. D. Agents providing free insurance consultations to prospective clients. Correct answer. C. Agents recommending insurance products solely based on personal financial gain. Explanation. In Georgia, conflicts of interest in insurance sales and recommendations occur when insurance agents prioritize personal financial gain over the best interests of their clients. This ethical issue can lead to misrepresentation, inappropriate product recommendations, and inadequate coverage for policyholders. Insurance agents are expected to act in the client's best interests by providing unbiased advice and suitable insurance solutions that meet their needs, rather than focusing on maximizing their own financial incentives. Question 91. What ethical considerations are important in underwriting and claims handling practices in Georgia? A. Maximizing policyholder benefits without proper verification. B. Providing accurate and truthful information in policy applications and claims. C. Denying claims based on personal preferences of underwriters. D. Delaying claims processing to minimize payouts. Correct answer. B. Providing accurate and truthful information in policy applications and claims. Explanation. In Georgia, ethical considerations in underwriting and claims handling emphasize the importance of providing accurate and truthful information in policy applications and claims. Underwriters must assess risks fairly and objectively based on factual information provided by applicants. Claims should be processed promptly and fairly, ensuring that policyholders receive benefits they are entitled to under their insurance contracts. Failing to uphold these ethical standards can lead to legal and regulatory consequences. Question 92. Which professional codes of conduct apply to insurance agents and brokers in Georgia? A. State-specific codes issued by individual insurance companies. B. Federal regulations governing insurance sales practices. C. Industry-wide standards set by professional organizations like NAIFA or IIABA. D. Internal guidelines developed by insurance agencies. Correct answer. C. Industry-wide standards set by professional organizations like NAIFA or IIABA. Explanation. Insurance agents and brokers in Georgia adhere to industry-wide professional codes of conduct established by organizations such as the National Association of Insurance and Financial Advisors, NAIFA, or the Independent Insurance Agents and Brokers of America, IIABA. These codes promote integrity, transparency, and professionalism in insurance sales and client interactions. Agents are expected to prioritize clients' interests, maintain confidentiality, and act ethically in all business dealings. Question 93. What are common ethical issues in insurance marketing and advertising that agents and insurers should be aware of in Georgia? A. Exaggerating policy benefits to attract customers. B. Failing to disclose relevant terms and conditions in marketing materials. C. Offering unfair discounts to certain customer groups. D. Using deceptive advertising tactics to mislead consumers. Correct answer. D. Using deceptive advertising tactics to mislead consumers. Explanation. In Georgia, ethical issues in insurance marketing and advertising involve avoiding deceptive practices that mislead or confuse consumers. Agents and insurers must provide accurate and clear information about insurance products, including terms, conditions, and limitations. Deceptive advertising can undermine consumer trust and lead to regulatory sanctions. Agents should adhere to state laws and regulations governing advertising and ensure that marketing materials are truthful, transparent, and compliant with ethical standards. Question 94. What are the key features of health insurance plans in Georgia? A. They provide coverage only for major medical expenses. B. They cover preventive care and wellness services. C. They exclude coverage for prescription drugs. D. They are limited to specific hospital networks. Correct answer. B. They cover preventive care and wellness services. Explanation. In Georgia, health insurance plans typically include coverage for preventive care and wellness services, in addition to major medical expenses. This coverage often encompasses routine checkups, vaccinations, screenings, and other services aimed at preventing or detecting health issues early. Preventive care coverage is mandated under the Affordable Care Act, ACT, for certain services deemed essential for maintaining health and preventing diseases. Question 95. What distinguishes HMOs, PPOs, EPOs, and POS plans in Georgia? A. Provider network restrictions and referrals. B. Prescription drug coverage options. C. Deductible amounts and copayment structures. D. Availability of catastrophic coverage. Correct answer. A. Provider network restrictions and referrals. Explanation. In Georgia, health insurance plans like HMOs, health maintenance organizations, PPOs, preferred provider organizations, EPOs, exclusive provider organizations, and POS, point of service, plans differ primarily in their provider network structures and referral requirements. HMOs typically require members to choose a primary care physician, PCP, and obtain referrals for specialist care within the network. PPOs offer greater flexibility with out-of-network coverage but usually at higher costs. EPOs are similar to HMOs but do not require referrals, and POS plans combine elements of HMOs and PPOs with in-network and out-of-network coverage options. Question 96. Which of the following statements best describes health insurance policy provisions and benefits in Georgia? A. Policy provisions and benefits are standardized across all insurance plans. B. Policy provisions vary by insurer and plan, outlining coverage details and benefits. C. Policy provisions are determined solely by state regulations. D. Policy benefits are primarily influenced by federal guidelines. Correct answer. B. Policy provisions vary by insurer and plan, outlining coverage details and benefits. Explanation. In Georgia, health insurance policy provisions and benefits are not standardized but vary based on the insurer and specific plan. These provisions outline the coverage details, benefits, limitations, and conditions of the insurance plan. It's important for policyholders to review these provisions carefully to understand what services are covered, any associated deductibles, copayments, or coinsurance, and other important details related to their health coverage. Question 97. What are common policy clauses found in health insurance plans in Georgia? A. Premiums and out-of-pocket maximums. B. Deductibles, copayments, and coinsurance. C. Network restrictions and provider options. D. Annual coverage limits and exclusions. Correct answer. B. Deductibles, copayments, and coinsurance. Explanation. Health insurance plans in Georgia commonly include policy clauses such as deductibles, the amount paid out of pocket before insurance coverage kicks in, copayments, fixed amount paid for covered services, and coinsurance, percentage of costs shared between insurer and policyholder. These clauses determine the cost-sharing responsibilities of the insured and impact the overall affordability and accessibility of healthcare services. Question 98. What do coverage limits and exclusions refer to in health insurance policies in Georgia? A. Maximum annual premium amounts. B. Restricted provider networks. C. Services or treatments not covered by the insurance plan. D. Geographic limitations for coverage. Correct answer. C. Services or treatments not covered by the insurance plan. Explanation. Coverage limits and exclusions in Georgia health insurance policies refer to services or treatments that are not covered by the plan. These exclusions may include specific medical procedures, elective treatments, experimental therapies, or services deemed medically unnecessary. It's crucial for policyholders to review their plan's coverage limits and exclusions to understand what services may require out-of-pocket expenses or alternative coverage options. Question 99. What is the primary purpose of the underwriting process for health insurance in Georgia? A. To assess the financial stability of the insurance company. B. To determine the coverage limits of the insurance policy. C. To evaluate the applicant's health status and determine risk. D. To verify the eligibility of healthcare providers within the network. Correct answer. C. To evaluate the applicant's health status and determine risk. Explanation. In Georgia, the underwriting process for health insurance involves evaluating the applicant's health status, medical history, and other factors to assess risk. This assessment helps insurance companies determine the premium rates, coverage options, and conditions of the policy based on the applicant's health profile. Underwriting is crucial for insurers to manage risk effectively and ensure that policy pricing reflects the expected healthcare costs associated with the insured individual. Question 100. Which of the following factors can affect an individual's insurability for health insurance in Georgia? A. Gender and marital status. B. Age and occupation. C. Political affiliation and social media activity. D. Vehicle ownership and driving record. Correct answer. B. Age and occupation. Explanation. In Georgia, several factors can impact an individual's insurability for health insurance, including age and occupation. Insurance companies consider age-related health risks and the nature of an applicant's occupation to assess insurability. Certain occupations or hazardous activities may pose higher health risks, affecting the insurance underwriting process and determining coverage options and premiums. Question 101. What does risk selection and classification involve in health insurance underwriting in Georgia? A. Categorizing applicants based on income levels. B. Assessing the likelihood of claims based on medical history. C. Ranking applicants based on educational background. D. Determining coverage based on social media presence. Correct answer. B. Assessing the likelihood of claims based on medical history. Explanation. Risk selection and classification in Georgia's health insurance underwriting process involve assessing the likelihood of claims based on an applicant's medical history, health conditions, and lifestyle factors. Insurance companies use this information to categorize applicants into risk groups, which influences coverage decisions and premium rates. This practice ensures that insurers can accurately predict and manage potential healthcare costs associated with different risk profiles. Question 102. Which of the following is a key aspect of state and federal regulations governing health insurance in Georgia? A. Establishing specific premium rates for insurance plans. B. Regulating the formation and licensing of insurance companies. C. Mandating coverage of cosmetic surgeries. D. Setting individual deductibles for health plans. Correct answer. B. Regulating the formation and licensing of insurance companies. Explanation. State and federal regulations in Georgia govern the formation and licensing of insurance companies to ensure their financial stability, compliance with legal requirements, and consumer protection. These regulations establish standards for insurers' operations, solvency, and conduct in the market, contributing to a stable and competitive insurance industry. Question 103. Which provisions of the Affordable Care Act, ACA, have a significant impact on health insurance regulations in Georgia? A. Requirements for minimum essential coverage. B. Limitations on pre-existing condition exclusions. C. Allowing insurers to impose annual limits on essential health benefits. D. Mandating unlimited lifetime coverage caps. Correct answer. B. Limitations on pre-existing condition exclusions. Explanation. The Affordable Care Act, ACA, imposes limitations on pre-existing condition exclusions, ensuring that health insurers in Georgia cannot deny coverage or charge higher premiums based on pre-existing health conditions. This provision aims to enhance access to health insurance coverage and protect individuals with prior health issues. Question 104. Which aspects of HIPAA regulations and privacy rules are relevant to health insurance practices in Georgia? A. Requiring insurers to disclose policyholder information to third parties. B. Establishing standards for electronic health transactions. C. Allowing unrestricted sharing of medical records among insurance companies. D. Mandating the sale of personal health data to marketing firms. Correct answer. B. Establishing standards for electronic health transactions. Explanation. HIPAA regulations in Georgia establish standards for electronic health transactions, ensuring the secure exchange of health information between healthcare providers, insurers, and other entities. These regulations safeguard patient privacy and confidentiality, promoting the use of secure technology for healthcare operations and insurance transactions. Question 105. What is a key aspect of understanding health insurance exchanges in Georgia? A. They are operated solely by the federal government without state involvement. B. They provide a platform for individuals and small businesses to compare and purchase health insurance plans. C. They are exclusively accessible to Medicare beneficiaries. D. They offer only one standardized health insurance plan option. Correct answer. B. They provide a platform for individuals and small businesses to compare and purchase health insurance plans. Explanation. Health insurance exchanges in Georgia, also known as marketplaces, serve as platforms where individuals and small businesses can compare and purchase health insurance plans from private insurers. These exchanges offer a range of coverage options and facilitate enrollment in qualified health plans, promoting transparency and choice in the insurance market. Question 106. What are enrollment periods and special enrollment options related to health insurance marketplaces in Georgia? A. Enrollment periods are limited to 1 month per year with no special exceptions. B. Special enrollment options allow individuals to enroll outside of the standard enrollment periods under certain qualifying events. C. Enrollment periods are determined by each insurance carrier independently. D. Special enrollment options are available only for Medicaid recipients. Correct answer. B. Special enrollment options allow individuals to enroll outside of the standard enrollment periods under certain qualifying events. Explanation. Enrollment periods in Georgia's health insurance marketplaces refer to specific times when individuals can enroll in or change their health insurance coverage. Special enrollment options allow individuals to enroll outside of the standard enrollment periods due to qualifying life events such as marriage, birth of a child, or loss of other coverage. Question 107. What are subsidies and premium tax credits in the context of health insurance marketplaces in Georgia? A. Subsidies are provided to insurance companies to cover administrative costs, while tax credits are offered to consumers based on their income levels. B. Subsidies and tax credits are only available to individuals with employer-sponsored health insurance. C. Subsidies help lower the cost of health insurance premiums for eligible individuals, and tax credits are applied directly to reduce premium costs. D. Subsidies and tax credits are available exclusively for high-income individuals. Correct answer. C. Subsidies help lower the cost of health insurance premiums for eligible individuals, and tax credits are applied directly to reduce premium costs. Explanation. Subsidies and premium tax credits in Georgia's health insurance marketplaces are financial assistance programs designed to make health insurance more affordable for eligible individuals and families. Subsidies directly reduce the cost of health insurance premiums based on income levels, while premium tax credits are applied to reduce the amount individuals pay for coverage, helping to increase access to health insurance. Question 108. What is a key characteristic of managed care organizations, MCOs, in Georgia? A. MCOs primarily focus on fee-for-service reimbursement. B. MCOs integrate financing and delivery of healthcare services. C. MCOs operate without any provider networks or restrictions. D. MCOs are exclusively government-funded organizations. Correct answer. B. MCOs integrate financing and delivery of healthcare services. Explanation. Managed care organizations, MCOs, in Georgia are characterized by their integration of financing and delivery of healthcare services. MCOs typically establish provider networks and employ various managed care techniques to control costs while maintaining quality of care. These organizations often use capitated payments and emphasize preventive care and care coordination. Question 109. What are network structures and provider contracting in the context of managed care organizations, MCOs, in Georgia? A. Network structures are unrelated to the types of providers included in an MCO's network. B. Provider contracting refers to the process of excluding all providers from an MCO's network. C. Network structures define the types and number of providers included in an MCO's network. D. Provider contracting is solely determined by state government regulations. Correct answer. C. Network structures define the types and number of providers included in an MCO's network. Explanation. In Georgia, managed care organizations, MCOs, establish network structures that define the types and number of providers included in their networks. Provider contracting involves negotiating contracts with selected providers to establish rates, terms, and conditions for services provided within the network. These structures and contracts are crucial for ensuring access to care while managing costs within the managed care framework. Question 110. What role does utilization review play in managed care techniques within Georgia's MCOs? A. Utilization review is not utilized within MCOs due to their structure. B. Utilization review involves increasing unnecessary services to boost provider revenue. C. Utilization review aims to evaluate the appropriateness and necessity of medical services. D. Utilization review is solely conducted by state government agencies. Correct answer. C. Utilization review aims to evaluate the appropriateness and necessity of medical services. Explanation. Utilization review is an essential managed care technique employed by MCOs in Georgia to assess the appropriateness and necessity of medical services provided to patients. Through utilization review, MCOs can ensure that services are delivered efficiently and in accordance with established guidelines, helping to control costs and maintain quality of care. Question 111. What is a crucial step in health insurance claims processing and adjudication in Georgia? A. Denying all claims upon submission. B. Issuing payment without any review process. C. Conducting a thorough review to determine claim validity. D. Excluding certain providers from the claims process. Correct answer. C. Conducting a thorough review to determine claim validity. Explanation. In Georgia, health insurance claims processing involves conducting a thorough review of submitted claims to determine their validity and eligibility for reimbursement. Adjudication refers to the process of evaluating claims against the insurance policy's coverage provisions and applicable guidelines. This step is essential for ensuring that legitimate claims are processed accurately and efficiently. Question 112. What is the purpose of explanation of benefits, EOBs, and claims statements in health insurance in Georgia? A. To confuse policyholders with complex information. B. To provide detailed information about the claims process to providers only. C. To communicate claim status, payments, and any patient responsibility. D. To delay claim processing unnecessarily. Correct answer. C. To communicate claim status, payments, and any patient responsibility. Explanation. Explanation of benefits, EOBs, and claims statements play a vital role in health insurance in Georgia by communicating essential information to policyholders. These documents outline claim status, payments made by the insurance company, and any remaining patient responsibility, such as deductibles or coinsurance. EOBs help policyholders understand how their claims were processed and what costs they may be responsible for. Question 113. What measures are taken in Georgia to prevent and detect fraud related to health insurance claims? A. Ignoring potential fraud cases to save time and resources. B. Conducting regular audits and investigations into suspicious activities. C. Encouraging providers to submit inflated claims for higher reimbursement. D. Allowing policyholders to submit fraudulent claims without repercussions. Correct answer. B. Conducting regular audits and investigations into suspicious activities. Explanation. In Georgia, fraud prevention and detection in health insurance claims involve proactive measures such as conducting regular audits and investigations into suspicious activities. Insurance companies and regulatory bodies work together to identify and address fraudulent practices, which can include billing for services not rendered or misrepresenting patient information. These efforts help protect the integrity of the insurance system and prevent unnecessary costs. Question 114. What are important ethical considerations for health insurance sales and service in Georgia? A. Misrepresenting policy features to increase sales. B. Providing accurate and clear information to clients. C. Offering special discounts to favored clients only. D. Ignoring client inquiries about policy terms. Correct answer. B. Providing accurate and clear information to clients. Explanation. Ethical considerations in health insurance sales and service in Georgia emphasize the importance of providing accurate, clear, and honest information to clients. Agents and brokers must act in the best interest of their clients, ensuring they fully understand policy terms, coverage options, and any limitations. Misrepresentation or withholding information can lead to consumer dissatisfaction and potential legal consequences. Question 115. What are some key consumer rights and protections in Georgia related to health insurance? A. Right to be charged excessive premiums without explanation. B. Right to review and dispute claim denials. C. Right to cancel insurance policies without notice. D. Right to withhold relevant information from insurance applications. Correct answer. B. Right to review and dispute claim denials. Explanation. In Georgia, consumers have the right to review and dispute claim denials by health insurance providers. This protection ensures that policyholders can challenge decisions that they believe are incorrect or unfair. It's essential for consumers to understand their rights and avenues for recourse when dealing with claim denials to ensure fair treatment under their insurance policies. Question 116. What principles guide fair marketing and sales practices in the context of health insurance in Georgia? A. Aggressive and deceptive sales tactics. B. Providing incentives to clients for signing up quickly. C. Disclosing policy terms and exclusions clearly to clients. D. Targeting vulnerable populations with misleading information. Correct answer. C. Disclosing policy terms and exclusions clearly to clients. Explanation. Fair marketing and sales practices in Georgia require agents and insurers to disclose policy terms, benefits, exclusions, and limitations clearly and transparently to clients. This ensures that consumers make informed decisions about their health insurance coverage without encountering surprises or misunderstandings later. Agents must avoid using deceptive or misleading tactics to promote sales. Question 117. What are optional policy riders and endorsements commonly associated with health insurance in Georgia? A. Increasing the coverage limits of the policy. B. Adding dental and vision benefits to the health insurance plan. C. Automatically renewing the policy without review. D. Lowering the deductible amount of the policy. Correct answer. B. Adding dental and vision benefits to the health insurance plan. Explanation. Optional policy riders and endorsements allow policyholders to customize their health insurance coverage to better suit their needs. In Georgia, common optional riders include adding dental and vision benefits to a health insurance plan. This provides comprehensive coverage beyond basic medical expenses, addressing specific health needs such as routine dental care and vision exams. Question 118. What is the purpose of critical illness and long-term care insurance in Georgia? A. Providing coverage for routine doctor visits. B. Offering financial protection against major illnesses and extended care needs. C. Excluding coverage for pre-existing conditions. D. Limiting coverage for hospital stays. Correct answer. B. Offering financial protection against major illnesses and extended care needs. Explanation. Critical illness and long-term care insurance in Georgia are designed to provide financial support when individuals are diagnosed with serious illnesses or require long-term care. These insurance products help cover expenses associated with critical illnesses not typically covered under standard health insurance policies, such as cancer treatment or long-term care services needed due to aging or disability. Question 119. What are supplemental health insurance products commonly offered alongside primary health insurance plans in Georgia? A. Homeowners insurance. B. Disability insurance. C. Travel insurance. D. Dental and vision insurance. Correct answer: D. Dental and vision insurance. Explanation: supplemental health insurance products like dental and vision insurance are frequently offered alongside primary health insurance plans in Georgia. These supplemental plans provide coverage for dental care, such as cleanings, fillings, and crowns, and vision care, including eye exams, glasses, and contact lenses, enhancing overall health coverage and addressing specific healthcare needs. Question 120. Ms. Anderson, a resident of Georgia, is concerned about protecting herself financially in case she is diagnosed with a critical illness such as cancer or suffers from a prolonged illness that requires extended care. Which insurance product would best address her concerns? A. Long-term care insurance policy. B. Term life insurance policy. C. Critical illness insurance policy. D. Disability insurance policy. Correct answer: C. Critical illness insurance policy. Explanation: in Georgia, critical illness insurance provides coverage for specific serious illnesses listed in the policy, such as cancer, heart attack, stroke, and organ transplant. If Ms. Anderson is diagnosed with one of these critical illnesses, the policy will pay out a lump sum benefit, providing financial assistance to cover medical expenses, loss of income, or other financial obligations. This type of insurance is particularly valuable because it offers a financial safety net during a time of significant health crisis.